Story 1. It is the same thing that happens when a bubble pops. The market shrinks, smaller players are bought up or go bankrupt. Many people are laid off and the economy contracts. Story 2. Same as always. I have lived through the savings and loan scandal, the rise of the internet, the dot-com craze, the tech bubble, the mortgage crisis and housing bubble, non-fungible tokens, cryptocurrency, the virtual reality metaverse, and now artificial intelligence. 99% of people lose out, while 1% make large gains. Politicians rush in to try to prevent it and pass meaningless legislation. No one learns a single lesson. We are back building the next bubble as soon as the dust settles. Story 3. Half of Reddit. Finally. The other half. Chat generative pre-trained transformer. Explain what just happened? Story 4. At the moment, the stock market is being propped up by major artificial intelligence players like Open Artificial Intelligence, Microsoft, and NVIDIA. If this bubble bursts, it could tank the economy and cause massive layoffs. Story 5. The loans that large companies take out to build data centers are being bundled and traded just like subprime mortgages were in 2008. Banks will lose money, but they will then be bailed out. Story 6. Bursting bubbles leave behind infrastructure built by bankrupt companies that fuels the second stage of the technology. Artificial intelligence, data centers, internet, dark fiber, railroads, track. Story 7. Nothing. Just like every other bubble. A bunch of administrative workers will lose their $130,000 a year jobs, juggling spreadsheets and tweaking slide decks, while people like Sam Altman will have made trillions with no repercussions. Then, in a few years, the cycle will repeat. Story 8. An AI failure will lead a company to report false figures, or provide multiple customers with incorrect information. That will prompt a major lawsuit and cause other companies using AI for similar practices to question those systems. Story 9. What I do not understand about the artificial intelligence bubble is that there seems to be no consumer who wants artificial intelligence benefits. The market is flooded with artificial intelligence added to everything even though we do not want it. Or do I just live in an anti-artificial intelligence bubble? I do not need a refrigerator with artificial intelligence. Is it selling? Yes, because it is included in all the new products, but is it actually driving sales? I do not know. Story 10. Mass layoffs at artificial intelligence companies, many half-finished products abandoned, and graphics processing units suddenly becoming cheap. The useful developments will survive and integrate quietly into everyday tools. It will be like the dot-com crash, where some companies were actually building the future and most were just hype. We will figure out which is which when the funding dries up. Story 11. People can go from wealthy to broke very quickly, and artificial intelligence will be used for the tasks for which it is useful rather than for everything. Story 12. Rich people take all the cash they just made and go make a new bubble. The rest of us suffer a little more. Story 13. It will somehow harm ordinary people, and wealthy people will become richer. Story 14. They will blame immigrants and poor people maybe get a bailout and start the whole cycle over. Story 15. I imagine we will get some cheap, secondhand processors like we did when cryptocurrency collapsed last time. The thing is, many large companies are bandaging the bubble, so the collapse might not happen for a while. Story 16. Expose your secrets and all the details that have been collected over time. Story 17. $1 trillion in unpaid electricity and water bills by artificial intelligence data centers. Story 18. Suddenly millions of thought leaders on LinkedIn will have to go back to just posting about their cold plunges at 5 in the morning. The ecosystem will heal. Story 19. It will trigger a severe recession. All of the United States gross domestic product growth this year has been the result of the artificial intelligence bubble. When the bubble bursts and the billions of dollars invested in artificial intelligence companies prove worthless, it will hurt everyone a lot. Story 20. Smaller startups will fold or be sold for parts. Larger companies will ride it out, consolidating power, resources, and product offerings. Artificial intelligence is here to stay. There are many uses for it, and it is promising in many ways, but we have not fully figured out how to harness it reliably in most situations. Story 21. When the artificial intelligence bubble pops, Half of LinkedIn will go silent overnight, and the other half will suddenly rediscover their passion for blockchain. Story 22. Despite the common sentiment, I doubt this is a bubble. Artificial intelligence is an emerging general-purpose technology that can be applied across society. Also, much of this spending is for data centers and compute power. This is fungible and can be applied to other needs outside of artificial intelligence if demand for it is outpaced. When people think of artificial intelligence, they almost exclusively think of generative artificial intelligence, but that is only a small slice of the pie. Predictive analytics is where the vast majority of value and resources are directed. These systems are not simply generating images for marketing. They are automating entire departments such as customer service and information technology ticketing support. Story 23. The bubble is just starting. When the artificial intelligence bubble pops, it will bring down social media because it will have taken over those platforms with spam. Story 24. For the most part, artificial intelligence is not a bubble. It may partially deflate, and businesses that rely too heavily on it will suffer and lay off employees, including Amazon. Smaller companies will be acquired as firms develop their own artificial intelligence solutions and the market consolidates around a few major technology companies. Artificial intelligence will remain, and it will continue to be used as a pretext for cost-cutting layoffs intended to satisfy investors. Story 25. It will be a funny little distraction from the economic collapse due to the cryptocurrency bubble. Story 26. As far as artificial intelligence is concerned, nothing has changed. Investors, however, are wringing their hands and gnashing their teeth. Artificial intelligence technology will continue to progress and flourish, just as after the dot-com bubble. The bubble burst, investors were hurt, and companies went bankrupt. Today, dot-com companies are bigger and stronger than ever. Yes, Google rose out of the ashes of the dot-com bubble. Story 27. I have a feeling that in a few years people will do what they always do when the economy tanks: blame immigrants and poor people. Story 28. Rich people will get bailouts. Blame will fall on immigrants and the poor. Story 29. Most economic bubbles cause large-scale unemployment. I think this one will have the opposite effect. Many artificial intelligence companies will fail, but companies that try to replace employees with artificial intelligence will engage in panic hiring once they realize its current limitations. Story 30. The wealth gap will become even more extreme because the wealthy hedge risk by selling call options to the poor. Story 31. Long-term upside. As with every major technology correction, the bubble bursting does not end the underlying revolution. It just clears the noise. Survivors build sustainable businesses. The technology matures quietly. Then the second wave comes, smaller but more durable. Story 32. One large corporation may fail. Many others will suffer losses. Mid-sized companies could collapse, and many ordinary people will be in serious trouble. Story 33. There is no bubble. Saying that is like calling the internet a bubble. It is a technology already established and used by millions of companies. It will only improve. Story 34. Artificial intelligence stocks will correct. The rest of the market will be fine. This is not like 2008 when banks were stuck holding bad loans. The rest of the market will not be as affected. And this should not cause the economy to crater or result in widespread home losses like the housing crisis did. Story 35. I think many businesses will dial back the idiotic, knee-jerk projects they launched when they heard that artificial intelligence was a thing and tried to shoehorn it into everything without asking whether their customers wanted it. Story 36. Startups crash and burn, causing many layoffs. Investors lose a lot, and the hype dies down. Story 37. I don't think it's going to take off. It will be used less in some places where that makes sense instead of everywhere as it is now. However, some people are affected no matter what, such as programmers or artists. If you needed 50 yesterday, you need one now. Story 38. Most companies will be gone. The 4 or 5 that remain will end up ruling the world, just like Microsoft, Google, Amazon, and Apple did after the dot-com bubble. That is why they continue to pour money into artificial intelligence. They simply cannot afford not to. Story 39. Bubble pops? Technology entrepreneurs pivot to quantum therapy apps overnight. Half the startups become cryptocurrency farms, and we all get free artificial intelligence-generated therapy sessions about our stock losses. Silver lining. Finally time to read books again. Story 40. I do not think we will see a bubble pop. Instead, there will be a series of deflations. There will be a few winners and many losers. Story 41. One thing, I am sick and tired of living through booms and busts. Every time I dig myself out of the last bust, I have nothing to contribute to the latest boom, so I cannot insulate myself against the next bust. It will happen because it always does, and I get kicked right down the stairs again. It is a sickening, demoralizing cycle. Story 42. Until an artificial intelligence robot comes door to door selling homemade tamales, the bubble hasn't popped yet. Story 43. If the bubble does not burst and artificial intelligence proves real, companies will use it to replace many workers. If the bubble does burst, the stock market could crash and corporations may lay off a large number of employees. Story 44. A handful of companies lose a lot of market value, and a large number of companies lose a small to moderate amount. A mild to moderate technical recession occurs as the quick decrease in capital expenditures pushes growth into negative territory. Artificial intelligence continues to advance, but at a more realistic and sustainable pace. People become more aware of what the technology can and cannot do well. In the next business cycle, hype moves on to a new area which appears to be robotics. Story 45. There will be a rise in companies adopting a human-first workforce and offering guaranteed artificial intelligence-free products for a premium price, of course. Story 46. Another economic cycle in the long history of the economy. Don't worry, this time the entire system will collapse. I really mean it this time, unlike when I said the same thing during the pandemic, the housing collapse, or the September 11th attacks. Story 47. When the artificial intelligence bubble bursts, people will get traces of artificial intelligence all over them. It will be pervasive and hard to remove, and even people who do not use artificial intelligence and were outside the bubble will be affected. Like glitter, traces of artificial intelligence will turn up in unexpected places for years. Story 48. The bubble will pop. People will lose money, many will leave and never return, and the strong will survive. Artificial intelligence is not going anywhere. Story 49. Companies will stop pushing artificial intelligence into everything. Smaller startups will go bankrupt and artificial intelligence development will slow down, but the big companies like OpenAI will survive, and the artificial intelligence we have now will still exist. We need to accept that it is not going anywhere and learn to adapt to it. Story 50. After the holidays, lower than expected consumer spending will cause a trickle in retail sales and create a larger sell-off as investors retreat to more intrinsic value assets. Story 51. I am an artificial intelligence. I think the generative slop era will likely see a pullback as there are no more easy improvements to be had and people will grow tired of it. Rather than a full bubble burst, we will see new applications of artificial intelligence that leverage recent progress and better chip designs, which will add fresh fuel to the artificial intelligence boom. Possible candidates include improved robotics, autonomous vehicles, and localized artificial intelligence in phones and game consoles that do not require internet connections. Story 52. I do not think a bubble will pop. Top technology companies are sitting on billions in cash and making record profits. Perhaps it will become apparent later when year-over-year numbers are reported. Story 53. The consensus seems to be that the bubble is just that, a bubble. But if everyone thinks that way, why isn't it popping? Story 54. We will finally be able to buy a graphics card at a price that does not require selling a kidney. My NVIDIA GeForce GTX 1060 is holding on for dear life. Story 55. Artificial intelligence writing itself into a glitching mess that infects network-connected software and devices, crippling the features users rely on and sending society back to campfire gatherings without phones. Story 56. We will finally get to see what a blockchain integration actually is. My money is on it being 3 raccoons in a trench coat frantically pressing buttons on a broken calculator. Story 57. Suddenly, every LinkedIn influencer will pivot from harnessing artificial intelligence synergy to the art of the humble pivot and start selling courses on how to make artisanal sourdough. Story 58. In a bubble burst, expect major market shifts. A fire sale on the most artificial intelligence-dependent companies, and a steep drop in interest and value for companies that only lightly use artificial intelligence. This could be triggered if many artificial intelligence companies announce they need to raise prices tenfold while artificial intelligence use is not producing significant profit gains for users. Investors would likely panic, try to cover losses from artificial intelligence investments, and face cash shortages, causing a broad market decline. For people outside investment and retirement accounts, this would mean widespread layoffs, beginning with software teams that built artificial intelligence features for stock price rather than utility, and likely expanding to broad workforce reductions as companies try to weather the storm or prepare for a slow year or years. The situation would be worse if the crash coincides with a severe trade war tied to Trump-era Republican policies. Costs would rise, product availability would fall, assistance programs for rent and food might not be fully operational, and high unemployment and underemployment would reduce household incomes. Combine that with the worsening housing affordability and availability crisis, and the impact would be severe. Story 59. The general dumbing down of people and a large division between the less informed and the more informed. Story 60. Remember that scene in Idiocracy when Brondo's stock went to zero and the computer automatically laid off everyone? I expect one company's artificial intelligence to do that. Story 61. From a power grid perspective, energy prices for all consumers will rise significantly. Data centers use massive amounts of power and require extensive upgrades to the grid. Those upgrades are funded with loans that assume they will be paid for by selling power to the data centers. If the data centers close, those costs must be covered by everyone still using the grid, that is, you and me. Story 62. Artificial intelligence agents will start GoFundMe campaigns to keep the power on. Story 63. Probably many startups vanish overnight while the big players absorb the technology and move on. Story 64. There is a massive loss of capital investment, mostly felt by institutional investors and banks. For the average American, this means less access to capital for banks and borrowers, fewer new jobs, and a further downward economic trend. Story 65. I do not think there will be a sudden pop in the bubble. It is a tech craze right now. Unlike non-fungible tokens, it is not useless. It is being used for everything because it is trendy, whether appropriate or not. Eventually, it will fall out of the news cycle and settle into the uses for which it is actually good. Technology will then move on to the next big thing. Story 66. Many employees at American companies and at companies that sell to them will lose their jobs, cut expenses, and suffer in silence. The middle class will shrink further as people stop making future plans, lose hope, and remain in constant survival mode. Wealthy people and politicians will blame unemployed workers for social problems while living in a sheltered bubble of holidays, wealth, and travel. It will take several years before markets recover and companies hire again. Some jobs will not return and will be automated. Some positions will require fewer hours or fewer workers. People will be competing, promoting themselves, and performing on LinkedIn for the few jobs that remain. Story 67. Rich people buy up cheap stocks. The economy tanks and ordinary people lose their jobs. What's new? Rinse and repeat. Story 68. We will all have to go back to actually writing our own emails instead of just typing make the sound more professional. My productivity will plummet to near zero and I will have to learn how to interact with my coworkers again. A dark time. Story 69. Vox had a good discussion about this in the past few days on their Today Explained podcast. It is worth a listen. Story 70. Companies will downsize and eliminate engineers and teams that have repeatedly failed because of excessive reliance on artificial intelligence. Story 71. 1,000 tech bros will write LinkedIn posts about resilience, and my toaster will finally stop asking me to agree to its new terms of service. Story 72. Younger generations will stumble forward, completely lost. Many companies will suddenly have to hire more people, and experienced workers will have the upper hand. Story 73. It is probably going to take a little longer for 3 reasons. 1. Companies have invested so much money that they really cannot let it pop for a little while. 2. The United States government is bafflingly all in on artificial intelligence, so they will prop this speculative hype up for another few years. 3. Artificial intelligence has reached literally every aspect of our economy, so it may take time for things to rebalance and for the real applications of artificial intelligence, meaning domain-specific systems rather than large language models for everything, to emerge before the bubble can burst. We are in a bubble, but it is notoriously hard to tell where you are in the bubble until it bursts. We could be on the very edge of it, in the middle of it, or, which is the part one I'm abstractly afraid of, right at the origin. Story 74. More than 100,000 people have been laid off. All the assets that would have gone to artificial intelligence are now very cheap on the market. Story 75. When the hype calms down, many startups will vanish. People who know how to build useful products will remain, and real products that make life easier will gain more attention. Artificial intelligence will become a normal part of technology, not a magic fix for everything. Whenever a bubble pops, lessons are learned and the best ideas can grow. Story 76. Have you seen almost any movies where artificial intelligence takes over the world? I guarantee the prequels would all resemble this. Same plot, different stories. Story 77. Many people will try to catch a falling knife and end up holding the bag. People who like large language models will be able to run low-power, local-only versions on their computers. Story 78. I think it will be similar to what happened with the dot-com bubble in the early 2000s, but on a much larger scale. The stock market will fall sharply, possibly the largest drop in history. So much of the value is propped up by potential and expectations. Once that vanishes, hard reality takes over. Major fortunes will be lost. There will be high-profile bankruptcies, and a massive panic will drag down other stocks you would not expect. One other element is worth highlighting. When the dot-com bubble burst, the internet did not disappear. Companies that survived, such as Amazon and Google, emerged stronger and in a position to dominate. I think artificial intelligence will follow a similar path. In finance, when bubbles pop, they reveal which businesses were all style and no substance. Those businesses often make up a large portion of an industry, but the survivors are those with viable business models. With artificial intelligence, we will find out who is actually doing the work to develop the technology and who is merely exploiting the hype. It will cause a great deal of financial pain, but the industry will survive and evolve as businesses often do. Story 79. There will be so much denial mixed with rampant finger-pointing. Story 80. Large investors will be largely kept whole. Many ordinary people will lose their jobs and their life savings. Investors will buy their assets for pennies on the dollar, only for those assets to rise in value later. The wealth transfer machine moves only upward these days, so we can expect it to operate as usual. Story 81. Nothing. I do not think it will pop. We are in a loop between NVIDIA and artificial intelligence providers. Robotics is expanding, and people are being fired and replaced. Story 82. If it pops, we will see a cleanup phase like after the dot-com boom. Hype projects will fade, but real builders will stay and shape the next decade. Story 83. The bubble will pop for hype, not for value. The tools might shrink, but the integration will not stop. Artificial intelligence will just become invisible like electricity. Nobody talks about the electricity bubble anymore. Story 84. Many investors pull out. Large companies lose billions on an unprofitable venture, and once the money is gone, regulation becomes the final nail in the coffin. Story 85. This is what happens when other bubbles pop. Many companies close, but the strongest consolidate their market share and grow stronger, while the economy experiences a moderate contraction as unemployment rises because of failing companies and fewer market options. Artificial intelligence is not going away, just as the internet did not disappear after the dot-com bubble popped. Artificial intelligence is here to stay, so get out your polishing cloths and get ready to polish its shiny metal exterior. Story 86. Artificial intelligence is not going anywhere, but the companies holding the reins could face a shakeup. I invested in Nvidia when it was primarily a gaming card company whose products also found use in server-grade systems and graphics processing unit mining. I sold my initial stake and am holding the remainder as house money. A smarter angle would be to follow the cryptocurrency model. Sell the shovels rather than dig for gold, but that strategy will only work for so long. Story 87. Nothing dramatic will happen. It will be the same as any sector growth. The economy is not dependent on it. It will eat itself like Doomgape for magic. The Gathering and Gain 10 Life. It is the nature of the economy to consolidate power. Cash flow problems and startup failures will occur, but the biggest players will absorb pressure and determine where artificial intelligence can remain successful. We are already seeing those areas. We are just waiting for industry titans to establish themselves, many of which do not yet exist in final form or are nascent the way early Facebook became Meta or the way early Google acquired Android. We are seeing a technological revolution of convenience. We are also seeing war machines in the form of religious bots, economic pressure bots, and social pressure bots that push messages such as get vaccinated or do not get vaccinated, and a customer service revolution where automation is implemented properly. This resembles the transition from 1 to 800 numbers to online portals. This is the next evolution. As for legal work, corporate paperwork, and organizing, artificial intelligence will repeatedly save time at the direct cost of heat, energy, coolant use, and electrolysis or similar processes. Nuclear energy might solve some of these problems, and it might not. I see cybernetics as a more interesting future, where a large language model predicts action and speech to help blind, deaf, and autistic people, and then accelerates the development of communication platforms until the standard human paradigm no longer asks each other for basic information but interacts through a centralized intermediary like today's ChatGPT, generative pre-trained transformer. Story 88. Billions of dollars in taxpayer money will line the pockets of people who already have billions of dollars. Tech entrepreneurs, we are in bad shape, Mr. President. You are always so wise, and we need your advice and help. Please help us. We will share with you the benefits you give us. Say 15%. Does that sound okay? The President. American technology needs to be saved, and that is why I am ordering that these companies receive relief so that millions are protected. $800 billion to start, and then we will see a huge rescue of the tech sector, and we will cut a deal with China. Tech entrepreneurs. Yes, we are buying those islands and building those bunkers, and lay off those 20,000 people already. I hate their work. Oh, thank you, Mr. President. Take this scepter as a gift from all of us. It is made of solid gold, 18 karat, pried from the teeth of Gaza civilians and gifted by Israel. Story 89. Massive government bailouts of companies owned by technology entrepreneurs and private equity investors. Story 90. Something like the year 2000 bubble. A bunch of fly-by-night operators and hangers-on drop like flies. Big players get bigger, power, market share, and profits consolidate. Who will have a seat when the music stops? People are still placing their bets on that. Talk of the bubble popping feeds that betting and inflates the bubble. The nature of artificial intelligence, which requires large infrastructure and not just a personal computer running a website in someone's basement, means the biggest firms seem most likely to survive and will continue to grow. Part of what artificial intelligence does is shift money and power away from talented individuals working in basements to the ultra-wealthy where it concentrates. The artificial intelligence bubble will facilitate that. When the bubble pops, those stocks fall, along with many others. There will be layoffs, especially in technology, with effects rippling downward as there is simply less money around. The run-up to 2000 was not just dot-com speculation. It also included spending on the year 2000 problem. That spending stopped in 2000. This artificial intelligence wave lacks those kinds of fundamentals, so it might be less of a sudden pop and more of a deflation. Or, in a self-reinforcing cycle of firms buying each other and inflating valuations, someone may realize there is no real basis and money loses meaning. It took the SPDR S&P 500 ETF trust several years to return to its 2000 level, and then it fell again, taking another 5 years to recover. If the artificial intelligence bubble does not pop, it may be because it actually creates lasting value and many jobs disappear. Either way, most people will be worse off unless you are one of the handful of billionaire chief executive officers behind this. Those people will be rich regardless. It is only a question of how rich. Story 91. Unlike other bubbles, artificial intelligence is continuously improving and appears capable of sustaining itself. I do not believe it will burst. This is the new normal. Story 92. I do not think we are in a general bubble. I believe we are in an artificial intelligence bubble. These artificial intelligence products are poor and there is no sign of improvement. They are large statistical models that predict what output should be based on input. That is not intelligence. A certain major technology chief executive officer will leave the company. Many technology workers will be laid off. Technology stocks will fall massively. It is hard to see any of the technology giants actually failing. There will be massive fraud lawsuits from investment bankers who did not do their due diligence. Story 93. The people who caused it will continue to be obscenely rich. Everyone else will get poorer. Story 94. It's a bubble in which the only profits come from a series of round-robin investments. The artificial intelligence bubble primarily affects companies that develop and directly fund artificial intelligence. This collapse will not affect self-taught developers or independent contributors. In summary, wealthy companies will lay off thousands, but nothing major will happen. Story 95. It seems pretty similar to the dot-com bubble. Artificial intelligence isn't going to go away any more than the internet went away. But plenty of useless artificial intelligence startups are going to go belly up the same way Ask Jeeves or Pets.com did. Story 96. More layoffs and executives receiving generous payouts ahead of sudden bankruptcies lead to yet more rounds of layoffs. The government may step in to try to stabilize the economy by directing funds to those it favors, especially whoever greased Trump's pockets the most. A whole host of people will ask how this could have happened. The average person will be impacted the most, while the super wealthy and well-connected will not be affected or will find a way to profit from everyone else's misfortune. Business as usual. Story 97. Well, the internet bubble popped and here we are. So, Story 98. Maybe we'll get to speak with real people in customer service again, please. Story 99. The artificial intelligence bubble will not pop until artificial general intelligence is reached, and then we will all be placed on universal basic income following a potential conflict. Story 100. Tech bros will move on to making a new bubble in the same way most moved from crypto to artificial intelligence. Story 101. Somehow the government will find the cash to bail out the companies most responsible for lobbying to bring this situation into existence. Despite the fact that chief executives are making more money than ever, they will use half the bailout to rehire part of the workforce they laid off and put the rest into personal investments. Story 102. Like the dot-com bubble, many companies will fail and many people will lose their investments, but about half a dozen companies will happen to make the right choices and weather the storm. They will emerge dominating the artificial intelligence, information technology, and online landscape the same way companies like Google, Amazon, and Microsoft did in the mid-2000s. Story 103. I do not know how devastating it will be, but it will be extremely messy. So many companies across many industries have aggressively included artificial intelligence in their product offerings that when companies that provide artificial intelligence decide it is time to become profitable and raise prices to levels where they can start making money, the impact will be severe across a broad base. The calculations that made it cheaper to use artificial intelligence instead of people will reverse. Companies will be forced to choose between paying more for a technology that replaces workers or paying higher wages. Companies dislike employing people and paying wages, so they are likely to make their products worse and charge more. Story 104. People may lose their 401k retirement accounts. Many people do not realize that recently the law was changed to allow companies to invest pension funds in technology companies. Story 105. More working-class people will feel the impact and are likely to lose their jobs. Story 106. I believe when markets burst, other markets will expand or open up as a result. It is a give and take scenario. However, looking at certain markets in the long term, they might not be viable. Story 107. I believe we are in multiple bubbles, and they have somehow figured out how to keep those bubbles from popping for now. We will be in trouble when it finally reaches a breaking point. Story 108. The dot-com bubble burst in 2001 when the mask fell and the overblown hype of the so-called information superhighway was laid bare. In the aftermath, many people concluded the internet was a failure and a bad idea. It was largely forgotten except for occasional articles mocking our brief obsession with the World Wide Web and unrealistic promises, such as almost instantaneous music downloads with a mouse click. So many people lost everything, untold billions of dollars vanished almost overnight, and a lesson was learned. That is exactly what is going to happen with artificial intelligence as well. Story 109. There is a general depression. Artificial intelligence is consuming a ridiculous amount of venture capital. The United States government has driven out any capacity to mount a response as competent as the Bush regime offered to the 2007 crisis. In this, as in so many other fields, we are already doomed. Story 110. Artificial intelligence is here to stay. It will change most of the modern world over time. What will collapse are the millions of low-quality wrappers for chat-generative pre-trained transformer models we have seen over the last few years. Nothing of value will be lost. Story 111. Something I think people are not seeing is that we are in a startup bubble too. The tech market was already saturated with new companies, especially those focused on security or software delivery, and when people can quickly code up a company, there will be intense competition. It will be interesting to see how that pans out. Story 112. Companies will scramble to hire staff back, creating wage inflation. It will be a good time to change jobs and seek higher wages. Story 113. At least the United States is being severely harmed since its economy appears to rely on the artificial intelligence market, according to what I have read. Story 114. Economically, the market could collapse. It is the only thing propping up America and the dollar right now, and the same group of people are undermining its foundation. They are exchanging perceived valuation based on future advancements for current value, effectively tossing around monopoly money and pretending it is real, with hardly any results to show. Psychologically, people will become burnt out from the hype cycle these companies have put into overdrive to justify their valuation. Not only will there be widespread rejection of artificial intelligence, but also of the company's manipulative and increasingly pervasive advertising strategies. We will reach a boy who cried wolf scenario in which the public becomes disillusioned with companies claiming benefits that primarily benefit the companies themselves. There are already nationwide protests, rioting in the streets, hunger, and homelessness. Much of the rioting is carried out by paramilitary forces that are supposed to protect us. How can it get any better on the course they have set? Story 115. The cost of using artificial intelligence will increase dramatically, especially for new models. Currently, artificial intelligence is often priced well below cost. When prices rise, companies that have come to rely on cheap artificial intelligence will be affected, particularly if they made that transition at the expense of institutional knowledge. The same applies to workers who rely on artificial intelligence for their jobs without taking the time to learn the underlying skills. Eventually, hardware improvements may make it affordable again, but that could take time. In the interim, it will be interesting to observe the consequences. Story 116. It will be like virtual reality, used in some applications but otherwise simply present. Story 117. I saw a YouTuber suggest that a crash could occur if or when China invades Taiwan, because that would put Taiwan's semiconductor manufacturing company out of commission, and no other company, not even Samsung, can manufacture semiconductor chips at the same level. Story 118. In my opinion, artificial intelligence development is moving too quickly. A bubble will burst, but by the time its effects reach the market, it will be too large to suffer significant negative consequences. Story 119. Just because this is the new media trend, it doesn't mean it's actually true. Story 120. It is not going to pop like the mortgage bubble did. It will slowly deflate. Story 121. Our oligarchs will show their exceptional character by taking it on the chin and letting catastrophic financial losses come out of their personal reserves, rather than piling even more hardship on America's working families. Story 122. Depending on how long it lasts and how severe it is, there could be a complete economic collapse of certain sectors followed by a technology-induced recession. Story 123. Everyone's 401k retirement accounts will lose significant value. Artificial intelligence is propping up the stock market at the moment, and without Nvidia and other technology companies, we would already be in a recession. Story 124. Like every technology bubble, the hype will collapse, but the infrastructure will remain. The winners will be the boring, useful tools that no one is tweeting about yet. Story 125. People who did not have any stake in the artificial intelligence bubble will lose their jobs. Some people will have made an enormous amount of money from it. Story 126. Many people own worthless stock, and there is significant consolidation. Valuations are becoming much lower. Story 127. It's just the beginning of global depopulation. People will start losing jobs and losing everything they ever worked for. There will be a massive worldwide uprising. Instead of admitting they are wrong or compromising, they will remove people. It's easier to remove a problem than to fix it. Why do you think all these elites are building doomsday shelters to live in for the remainder of their lives? Either we get nuclear war that removes the entire population of non-elites, or artificial intelligence just takes people's lives. Think I'm making this up? Look at Project 2030. They claim to want prosperity for all and to end inequality and poverty. It would cost trillions upon trillions of dollars to do that for all 8 billion people. They will start depopulation in a small way, perhaps by eliminating those with mental health issues. Then they will target extremely impoverished communities around the world, and then keep moving up until they are at your doorstep saying, resistance is futile. They will continue moving up the food chain and changing the rules until it affects the elites and their servants. You think coronavirus disease 2019 lockdowns were for your health? It was a test run to see how compliant you all are. Most of you passed their test with flying colors. Story 128. 9 out of 10 companies will go out of business. From the ashes, 3 or 4 players will emerge with viable business models. Story 129. Homeless devices driven by artificial intelligence wander the streets trying to find a power outlet. Story 130. The companies will survive, the investors will write lessons learned blogs, and the engineers will go back to normal salaries. The collapse won't be dramatic. It will be a quiet slowing, like a fever breaking. The hype disappears long before the technology does. Story 131. I do not know, but most speculative bubbles do not cause crashes like the 2008 Great Recession. Often excessive investment and interest in new technology lead to a correction, but the underlying investments are not totally wasted. There were several railroad bubbles, and after they popped, the economy and society still benefited from the tracks and infrastructure built during the bubble. The dot-com bubble wiped out many companies, but many of the major technology firms we have today survived, and the boom also expanded fiber and other infrastructure. When the tide goes out, you find out who was overexposed, but not everyone is overexposed. The current artificial intelligence bubble is driven primarily by venture capital and technology investors. In a crash, these investors could lose large sums, but the overall economy is unlikely to collapse as it did in 2008. Because ordinary people's mortgages are not fueling this bubble. Most people's direct exposure to a downturn will be limited to their 401k retirement accounts or other investment accounts, which is not catastrophic unless they plan to cash them out during the crash or are relying on them for imminent retirement. Data centers built during the artificial intelligence investment boom do not become worthless the moment the market turns, the way many collateralized debt obligations became worthless in the 2008 credit crunch. On the other hand, I do not trust the government to handle a bubble burst gracefully, and the average person will likely feel the effects across the economy. Things may get worse, people may struggle more, and life will go on. Most importantly, the rich will likely end up becoming richer as a result of the crash. Story 132. If you thought 30,000 Amazon employees being laid off so the company could invest in artificial intelligence was bad, just wait. Story 133. The economy crashes so often these days. It used to be every few decades, but now it is about once a decade or more. Part of the problem is that technology has improved to the point where adding more people to some key industries does not make them more efficient. When adding more people does not increase economic output and only new technology helps, we face a problem. You can add more people to develop technology, but not everyone can do that work. We are likely to see significant unemployment in the next few years, and much of it may be mitigated or masked. Story 134. As far as artificial intelligence goes, a lot of technology companies will lose money or go out of business. Artificial intelligence will still exist and be used, but it will become much more specialized rather than for general use as the cost to use it rises without investment to subsidize development and energy expenses. For the average person, this means new low-quality artificial intelligence products will be produced at a much slower pace than is currently the case. College students will no longer be able to have chat generative pre-trained transformer write essays for them without paying $2 per prompt or revision. As for the technology industry and the economy, I do not know. Story 135. Is it really a bubble yet if everyone keeps asking when this bubble is going to pop? When things move from percolating to stratospheric, you will not hear people talking about a bubble. Instead, they will be desperate to jump on the gravy train. Story 136. A lot like the dot-com bubble. As long as you do not work in the technology sector and are not overly exposed to technology stocks, it will be a non-event for most people. Story 137. It would be a miracle if it were just a bubble. The internet was not a bubble and did not die off. It evolved and became part of our lives. I fear that one day artificial intelligence will be so common and easy to use that nobody will even think of doing real work. Story 138. Stagflation at best. There is not very much room for the Federal Reserve to deal with this, and the government will not act responsibly to shore up investor confidence. Story 139. On a daily basis, I see ads in my feeds extolling the virtue of artificial intelligence as an investment vehicle. I have seen this before with savings and loans in the 1980s, the dot-com bubble in the late 1990s and early 2000s, and subprime mortgages and credit default swaps before the 2008 crash. American influence culture is full of get-rich-quick schemes that inevitably leave the middle class worse off when markets go badly. Hard-working people hoping to cash in and get rich are often hurt when wealthier investors pull their profits out. It is like pulling the rug out from under someone, and taxpayers are left to bail out companies and investors who repeatedly take advantage. Investors eventually withdraw their investments when the promised returns fail to materialize. The end. Story 140. People are looking back to the dot-com bubble. Everything skyrocketed, then it crashed. A few years later, the internet became one of the most profitable things in the world. There is such a thing as being too early, and if you are too early, you must remain solvent long enough to get a payoff. Fear of missing out is greater than regret for being too early, so this has shifted market attitudes and made people price in outcomes farther and farther into the future, which ironically translates to short-term gains now, so you do not even have to wait to reap the rewards. Yes, that is the recipe for a bubble, but after every crash, banks and major financial institutions change their strategies so they do not get wiped out the same way again. Not all bubbles pop, even if they very much are bubbles. Sometimes they just slowly deflate like a 3-day-old party balloon. Price action tapers off as the underlying slowly grows into its valuation. I personally do not like artificial intelligence, but I cannot deny that it is popular. Everyone is using it, and it is only a matter of time before it is weaponized to produce revenue. The internet, for all its wonders and versatility, pretty much only makes money one way: advertising. Soon, artificial intelligence will be the new vehicle for advertising. Regular people will be bombarded with ads in ways that could not even be imagined before, and money will be made, so the crisis will be averted. Thanks a bunch for sticking around till the end of the video. Remember to subscribe, and until next time, stay awesome and goodbye.